Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Magna Mining. Magna Mining is traded on the TSX.V under the ticker NICU and on the OTCQB under the ticker MGMNF. And I'm joined today with the CEO of Magna Mining, Jason Jessup. And Jason, it's great to get you back on the show for an update. We're going to be diving in today to the news that you put out to the marketplace just the end of last month on May 29th. And it's really just highlighting the first quarter results from the company. You've been traveling and at a conference, so we're just now circling back the wagons to get this update out to the audience here. But it was an exciting time for the company because the big thing that happened in Q1 was you closed on the transaction with KGHM on their whole portfolio of assets. So everything from McCreedy West and Levack and Podolsky to a number of exploration projects. So we'll get into that a little bit. And it was also your first month of production out of McCreedy West. You only had 1 month in there because these transactions closed in the end of February, so you only had March, but it's still a very significant transitional quarter for the company. So why don't you walk us through the key takeaways from Q1 of this year?
Yeah, good morning, Shad. It's great to be on again. It was really transformational quarter for us. Once we closed that deal, we became a producer of copper and nickel and PGMs here in Sudbury. It's been our goal for a long time. It's been really exciting to be able to realize that. And as you mentioned, end of May, we announced our Q1 financial results. So that is as you said, just 1 month, very small snapshot, I guess, of what we are doing and what we potentially can do. But it was a good first month, considering that we are starting off, with really no broken ore inventory and a lot of transition. Some management were changed. We had to really align the team at the mine with Magna and our goals and philosophy of what we wanted to accomplish at the mine this year. So it was really a 3-week month, but we were successful in mining just around 20,000 tons of ore that was mined and shipped off site, and at about 3% copper equivalent grade. So, pretty decent grade. And all in all, we ended up with a small cash margin. So, did a little better than break even, which was better than I actually expected. And we finished the quarter with $38 million in the treasury. So, in a pretty strong position to continue executing our plan going forward.
Yeah, nice to have a little revenues coming in from the mining, even if it's just 1 month, and obviously setting you up for a good Q2 here. Now, another thing that we had discussed a little bit in the past, but it may be worth reiterating, is that you also are looking at ways to optimize the operations. And this happens whenever any company takes over an operation, they kind of see what is the culture. And so one of the things you were looking at was increasing the number of shifts to really get more optimization, but just some other things you were doing underground and at site. Maybe walk us through some of the things you think you can do to even optimize operations even further as we've moved into Q2.
Well, there are lots of things we can do. Everywhere I look, I see opportunity at the mine, and our COO has been doing a great job evaluating sort of processes and making those improvements. And we've changed out some key management people. We have a new mine manager in there as of the start of May, and someone we strongly believe in and think can do a great job at just realizing some of those opportunities. Now, the workforce in the previous operator, I wouldn't say anything bad about them, but they were a bigger company that just had different priorities and operate in a different manner than a junior like us who is much more entrepreneurial. And so that's what really creates, I think, some of these opportunities, just a different approach. And really, this is a flagship asset for Magna, and it was a non-core asset for the previous owner. So that's one of the big differences. So as you said, one of the things we recognized was just the amount of time spent and resources allocated to underground mine development. So putting in the drifts and the ramps to access different stoping areas, it hadn't been a priority previously. We recognize that as being absolutely key. It's one of the main KPIs that we are measuring and tracking closely. And, we've seen good improvement even in just that 1 month in March, good improvement. And I can say that, we continually improve our development productivity and the allocation of resources. And this speaks to the additional shift that we added in. So we went from a 3-shift schedule to 4-shift schedule, manned up those extra shifts with people on development. And again, that helps put more development every month into the mine, which allows us to get further out to that western side, access new ore mining areas, which gives us more flexibility. All that being said, we are this year focused on getting development in place and setting ourselves up for a really strong 2026. That is our focus. So if we have a choice of moving ore or moving waste, we will always move the waste first. It's critical. And that's the message we're giving to the workforce. Right now, we do not want to sacrifice development for short-term ore production. And we can do that. And we have the budget to do that, and it's really important. And with that, I think we're going to get the right results. And not too often, junior companies sometimes take that short-sighted approach where they put ore production ahead of development. And really what you do is I always say you paint yourself into a corner where you don't have options to mine because you don't have the development out far enough in front of you. So we're taking the approach of setting ourselves up this year, taking the year to do that properly. And with that, we believe McCreedy West will be a long-term sustainable operation.
I think what you covered is so interesting, Jason, about the development, because you're right. I can think of a number of base metals, but also gold and silver mines that were kind of bootstrapped in the very beginning. They didn't put enough focus on development. They did paint themselves in that proverbial box, and then they got to the point where they didn't have enough throughput, they didn't have enough cash flows coming in, or they had some kind of a congestion in the mine and they couldn't get to certain areas, and it became a real financial sticky point for them. So I think it's interesting what you said about focusing on the development. Let's talk about that as you head over into the west area, that eventually the plan is also to use that development to start drilling from underground and test some areas that don't have the same density of drilling.
You're absolutely right. So the western side of the 700 copper zone is what we believe is the future of the McCreedy West mine. There's a lot of opportunity there. As you get to the west, Inco, when they historically were mining, had a relatively high cutoff grade, something in the range of, in simple terms, sort of 4% nickel plus copper cutoff. And once they get further to the west, got higher in copper, they'd often just stop mining their stopes. If you were to continue for another couple hundred meters, you would end up at the Hardy mine, which is a historic mine that was previously operated by Falconbridge. Now it's owned by Glencore. It's been shut down for many decades, but there's a boundary area in between, and we see a lot of potential there. There's some historic holes drilled from surface and a few poor angled holes drilled by FNX and KGHM that does show this mineralization does continue. And so this is going to be exciting for us to get out to this western side where we can properly start drilling off these areas with reasonably length, better angled holes. So that should happen sometime towards the end of August, start of September, we're hoping to get the drills out there and set up. And then in Q4, we'll start to see some results coming back from those areas. So that's an exciting opportunity, and I think it's going to add a lot to the story and a lot to the mine. What we've also done is to increase development even further. So we've been maximizing the productivity of our current crew. We've also brought in a contractor for a 6-month term to assist in putting in more development. And again, looking at sort of return on investment, we see this as very positive, and we're quite excited to have them in. And again, we'll open up a lot more areas where we'll be able to drill and set ourselves up for mining in 2026.
Well, and Jason, in addition to all the development work you're doing, and eventually that'll lead to ramping up even more production, there's different zones inside this mine. Obviously, you're reporting in copper equivalent, and that's pretty high copper grade if you think about 3% copper. Now, some of that is because you have other contributing metals in the mix. So just for people not familiar with the project, really at all these different areas and mines and exploration projects in Sudbury, you get copper, nickel, and PGMs, platinum and palladium along with it. Are there parts of the mine that are more nickel PGM focused and parts that are more copper focused, or is it mostly copper all around in McCreedy West? Maybe give us a little color around the different metals mix.
Yeah, this is one of the beauties of Sudbury deposits is, and specifically McCreedy West. So we do have a nickel dominant zone called the Intermain Nickel Zone. And this was an area that was mined by FNX Mining. When I was at the mine in 2005 to 2008, we did a lot of mining in the Intermain Nickel Zone. Currently, we have about a 2.5 million ton resource at about 1.6% nickel and about 0.25 copper. So very much nickel dominated. And currently we aren't doing any mining. Now we did ship a little bit of this material in March, and we'll continue to sort of just wrap up a few stopes that were already developed when we took over the mine. But our plan this year is to focus on our 700 copper zone. And the 700 copper zone, as it is described, is more copper dominant. It has a resource of about 5.2 million tons at just under 2% copper and about 0.7% nickel with probably 2.5 to 3 grams of precious metals, platinum, palladium, gold. And then we also have another zone, which is called our PM zone, our precious metal zone. And this is another footwall zone below the 700 copper zone where the mineralization becomes more platinum, palladium, gold rich with minor copper and nickel. Now, there's about 1.5 million tons left in that zone at about 0.8% copper and about 5 or 6 grams of platinum, palladium, gold combined. And it's historically a bulk mineable type zone. So it's widely disseminated where we historically with FNX taking 20 to 30,000 ton stopes. We're not mining that zone at this time, but as we see platinum and palladium prices rebounding quite well over the last few weeks, it could be an area that we would look at doing some more mining at later this year if that opportunity presents itself and it makes sense and has margins as good or better than we're seeing in the 700 copper zone.
Yeah, it's interesting that you have these different zones that you could basically turn on depending on pricing backdrop. So like you say, if platinum and palladium keep running like they have started waking up recently, that's a zone you could kind of get into, and then you'd have a little gold in the mix there too. And then if nickel prices ever get off the mat, you could also kick in that Intermain nickel zone again. So you have some optionality into how you would mine this overall project. But right now, focused on the copper, and rightly so. Copper is doing great, and it's a great time to be producing copper. Now, what can you tell us as far as how things are setting up for Q2, as far as anything you would want to guide the audience on? And then it sounds like a lot of the development work is still going to take some time. So is it more of a story where it's a ramp up into Q3 and Q4? Maybe just give us a little color around how the operations will be ramping up for the balance of the year, Jason.
Yeah, we are still in I would say, a development mode. So one way you could look at where McCreedy West is right now would be almost as a pre-production startup. So we're producing ore, but it's still development focused. That is where we're at right now. So, I'm not going to give any strict guidance on production for the rest of the year, but what I can say is expect that we're going to be focusing on setting ourselves up, doing development, mining, some ore stopes where it makes sense. I think that there's, a lot of opportunity at this mine, but we're also very cognizant that, we're in the fortunate position to have cash in the bank and be able to set ourselves up properly. And that's what we're going to do.
Okay, makes sense. So really, it's a development year. The big production year is going to be setting yourself up for next year in 2026, but you'll still be producing as you're developing. So kind of a mixed bag there, but that gives people the right expectation as far as the longer term approach. And like you say, setting yourself up for success. When you talk about setting yourself up for success, let's also remind people, Jason, you're not a one-trick pony here. You've got multiple projects on the go in the Sudbury area. Now, mine number two that could come into the fold maybe as soon as next year is the Levack Mine that was also part of this acquisition that you capitalized on in February. And the Levack Mine you've also produced from in the past when you were FNX. So give people a sense of what's going on there. I know you're busy with the drilling currently, but also how soon could something like Levack come into production?
Yeah, Levack is a great mine. It's a mine that I've worked at before when I was with FNX, and we brought a high grade copper footwall deposit into production. The Morrison deposit, it produced up until 2019, till the mine went on care and maintenance. So right now we are working on our internal study to look at a restart. We're doing some drilling. We had three drills turning. Now I think we have two drills turning at the moment, looking to get underground drilling in the next couple months, which I think is going to be great because it'll really shorten up some of the length of drill holes and provide quicker turnaround for testing areas. But it is a great opportunity. I think it has both that nickel dominated contact mineralization in a historic resource. It also has this high grade copper footwall mineralization in a couple different areas. We're focused on the Keel zone at the moment because it's an unmined zone that it's near surface, and we think we could bring that into sort of the early part of a restart plan. And it also has, I think, great exploration potential. So one of the drills we have right now is drilling a deep hole from surface to test a footwall target that is in an area that looks very prospective, has never been tested. So it's got, I think, all the key components. It's got a significant historic resource. It has, both high grade, sort of narrow vein potential with bulk mining potential. It's got an existing shaft and on all the infrastructure you need to run a mine that people are still going underground on almost every day and use the secondary egress. So it's in decent shape and, potential to make another great discovery. And, if future discoveries look anything like historic discoveries that FNX made, that could be extremely exciting. So we really like Levack Mine. It is a great opportunity for us, and it could be the next mine that we put in production. We'll get that internal study done sometime by Q4, and we hope to have an updated resource out, an NI 43-101 resource on Levack Mine before the end of Q3. So lots happening at Levack too. It's keeping us busy. And Crane Hill, like we haven't spoken about Crane Hill in some time, but it is definitely a fantastic project that we're looking at again and doing some more engineering work, working on bringing in power line, grid power, finalizing the permanent dewatering setup, and getting everything in place that subject to us having the right cost of capital, we could move both Levack and Crane Hill ahead simultaneously within the next 6 to 12 months. So yeah, we could be, have three mines producing ore potentially in the next 3 years.
Yeah, I'm glad you brought Crane Hill into the discussion, Jason, because I was going to ask you. I've had a couple people write in saying what's going on there. And so you're still working on multiple projects at once. And we should also mention that you haven't forgotten about Shakespeare. You still have the Podolsky mine, which is a past producing mine that was part of that KGHM acquisition as well. That's another mine that could be turned on down the road. So there's multiple projects going on in Sudbury, and you guys are busy working at, mostly Levack and McCreedy, but still working on Crane Hill. So a lot going on with Magna. Now, I also want to bring up a question as far as critical minerals and, the ability to get on the government's radar. A friend of the show, Jamie Levy over at Generation Mining, put out a press release just on Friday highlighting the province of Ontario and mentioning that the Marathon project for Generation Mining was on their list as far as a strategic mineral, and that Ontario as a province was putting a lot of focus on moving these projects forward into development. Do you think that could spill over into the Sudbury camp? Do you think that obviously Sudbury is like the biggest production center and has two active smelters with Vale and Glencore? Do you think that you could be on their radar, Jason?
Well, I don't think there's a possibility we couldn't be. Let's put it that way. Sudbury is the critical minerals central hub of Canada and definitely in Ontario. I think the last time I saw the 11 critical mineral mines operating in Ontario, nine of them were in Sudbury. So it is very important to critical minerals production for Canada and of course Ontario. So with Magna having, a producing critical mineral mine that's in the ramp up stage and four other permitted critical mineral mines that are past producers in Sudbury here that really just need capital to get going. I would say that, yeah, it's safe to say we're definitely on their radar.
Well, it's just something that I wanted to ask you about because I think it's interesting. We hear a lot of lip service about it over the last couple of years, but we are now seeing governments in the U.S. and Canada and regionally and provincially or in the states starting to like target these projects. And so it's nice to see the mining sector getting a little boost from the government to realize that, hey, if you want a supply chain outside of China, you got to help some of these projects along. So nice that mining's front and center. Obviously, we've talked a little bit in this interview about all the exploration work the company's doing at Levack, but you're still doing exploration work in McCreedy West. Is there anything else you want to say on the exploration front as far as some of the upcoming news catalysts that you want investors watching out for?
Yeah, investors can expect to see news coming out from us from an exploration perspective quite regularly. We have had a little bit of delay with some of our assays at one of the labs, so that unfortunately sort of set things back a couple weeks longer than we had expected. But we do expect to have some more results out with 4 drills turning. There's definitely lots of holes being put in the ground, and we're looking forward to sharing that with all of the investors out there. So we will be getting information out soon, and yeah, and we've been very pleased with how exploration has been going this year.
Well, definitely keep us posted. We'll get you back on for an update, Jason. I think we'll wrap it up there for today, but a lot going on with Magna Mining. A solid first quarter for the company, like you say, a transformational quarter because this acquisition is going to pay dividends far down the road because there's even projects we haven't even touched on in this interview yet that are also part of that. It's a big exploration package. You've got other projects of significance there. So it's definitely a game changer for the company. And you're still moving forward the other projects that we had been talking about for years, like Shakespeare and Crane Hill. So a lot going on with Magna Mining. And for those listening in, if you want to follow along with all the news, definitely click on the link down in the show notes. It'll take you right over to the Magna website, straight to their news section where you can sign up for updates or just follow along. Jason, I'm sure we'll be talking again when some of those drill assays do come back from the lab, so keep me posted. And as always, looking forward to our next conversation.
Thanks a lot, Chad. Talk to you soon.